What's up guys, it's Nathan here. The Commonwealth Bank of Australia has made headlines by announcing an interest rate hike for new borrowers, synchronising the rate rise with the Reserve Bank's recent decision earlier in the month. This move coincides with CBA's strategic withdrawal from the fierce mortgage wars, which erupted earlier this year. Today, we're going to explore the latest developments in Australia's mortgage market, how the Commonwealth Bank has increased their rates for borrowers of new mortgages, and discover the implications of Commonwealth Bank's strategic retreat from the mortgage wars. The Australian mortgage market, which is worth an estimated $400 billion, has witnessed an intense scramble amongst the banks to protect their market share in recent times. Commonwealth Bank has consistently demonstrated resilience in the turbulent mortgage markets. In most recent times, major banks including ANZ, Westpac, NAB and Commonwealth Bank had all introduced cashback deals to allure new borrowers for refinancing. However, these incentives have played a significant role in eroding their profitability. As a result, banks are striving to deepen and fortify their relationships with customers to prevent them from coincidentally refinancing. And if you find value in this video, please consider hitting that subscribe button, as it really does help out the channel. And a big thank you to all our subscribers for your support. Means the world to us. Thank you very much, and we hope you enjoy. CommBank has recently signaled the end of the mortgage wars by retreating from their $2,000 refinance rebate for new borrowers recently. This move was largely influenced by investors pressuring the Commonwealth Bank to prioritize profitability, especially considering an anticipated slowdown in new lending. Commonwealth Bank will no longer offer this cashback reward to new mortgages from the 1st of June. To add to this, Commonwealth Bank has increased their variable rates for new customers by 0.1% today. This was combined with their 0.25% rate hike, which was also passed on today, making an increase for their new loan customers of a 0.35% on their variable rate. This will undoubtedly have a substantial impact for new borrowers. The rate increase comes at a time when Commonwealth Bank is retreating from mortgage wars, and they're signaling to the market that the fierce competition is not sustainable. After a year of consecutive rate hikes by the Reserve Bank to combat inflation, borrowers have been hunting for cheaper loans, resulting in a flurry of cashbacks and lenders willing to sacrifice their profit margins for market share. There are several potential explanations for Commonwealth Bank's retreat from the mortgage war, including a desire for increased profitability, risk management, regulatory pressure, and operational simplicity, as well as changing economic conditions. In more recent times, banks have been pushing for new business by offering lower rates and attractive deals like cashbacks. While this is an effective way to get new customers, it can also cut into the bank's profitability. If investors are pressuring banks to improve profitability, the bank might actually decide to retreat from such fierce competition, which might have been one of the reasons why Commonwealth Bank have withdrawn a number of their offers. A competitive mortgage landscape can also involve risky lending. If a bank fears an increase in loan defaults due to economic instability or potential changes in the property market, this could be another reason to retreat from the mortgage market. The good news is there's been persistently low levels of late mortgage repayments reported across the banks, and this is attributed to the country's low unemployment rate, which has been like this for several decades. However, arrears in the mortgage market may still rise as borrowers face higher cost of living pressures. Regulatory bodies may also express concern about aggressive lending practices if they believe the practices could risk the stability of the financial system. If regulation pressure is mounting, this could be another driving force behind Commonwealth Bank's strategic move. Another reason might be due to customer retention, as high churn rates characterized by customers quickly refinancing their mortgage to other banks will also adversely affect the bank's profitability margins. Economic conditions can also play a role. In a slowing property market or when broader economic conditions are changing, such as rising interest rates, banks might find that aggressive lending is less sustainable or less appealing. It's definitely interesting to see Commonwealth Bank's latest move, as we talked about earlier in the week, They removed the $2,000 cashback, and now they've increased their rate they're offering new customers by being less competitive, effectively passing on the Reserve Bank's rate rise of 0.25% and then adding 0.1% to increase their rate by 0.35%, effectively signaling to the rest of the market that they're no longer competing in these fierce mortgage wars, which might be a race to the bottom. It's likely that Commonwealth Bank's decision is based on a combination of factors rather than a single reason. Here at Hunter Galloway, we are mortgage brokers and we help with people Australia-wide. So if you're looking to buy a home or you need help with refinancing, hit us up. Call us on 1300 088 065 or visit our website huntergalloway.com.au, where we'd be more than happy to have a discussion and review your situation and explore the avenues and options available to you. Guys, thanks again, and we'll see you next time.